Hello, everyone, and welcome to our continuation of the Roadmap to Climate Action in Middle East and North Africa event. If you're joining us, you are attending our second panel for this event on our first day, which will be our last session for this day before we continue on tomorrow. Today, and this particular panel is going to be focused on strategic and optimal approaches for green investments. And I'd like to introduce the moderator for this session, my colleague, Dr. Karen Young. She's a senior fellow at the Middle East Institute, as well as the director of the program on economics and energy. So Karen, I'll pass it on to you.
Thank you, Mohammed, and welcome everybody. Thank you for joining us. It's a pleasure to have this panel together with a diverse and I think expert set of views on debt and equity finance in MENA that's green and sustainable, along with an example of some of the new initiatives we're seeing come to market in carbon capture, carbon trading, and reforestation in the region. So please let me introduce our panelists. We'll have opening remarks from each of them, then a round of questions, discussion before opening to audience questions in about a half an hour or so. So if you would like to ask a question, you're welcome to go ahead and put it in the Q&A function to write it. Also, just a reminder, the webinar is recorded and streaming online to the public. So first, please let me introduce Jill Doshi. She was CEO and founder of the Potomac Group, which is a restructuring advisory practice in Washington. Jill has focused on issues of debt sustainability, restructuring, as well as strategies for stimulating growth, market access, and infrastructure finance. Second, we'll hear from Lama Kiase, who's an investment officer at the International Finance Corporation. Lama is an energy economist, an infrastructure development professional. She's worked in a number of different emerging markets, currently at the IFC, but prior to joining the IFC, she was at the International Monetary Fund's research department covering global commodity markets. And Lama is also a non-resident scholar in our economics and energy program at MEI. Third, we'll hear from Asad Khan, who leads the remote sensing department at Blue Forest, based in Dubai. And he's joining us late in the evening, so we're really grateful for that. Asad has a master's in science in wildlife conservation and drone applications, as well as a bachelor's degree in ecotourism and wildlife management. In his current role at Blue Forest, he's working on developing efficient techniques to monitor and predict deforestation in mangroves by leveraging drones, remote sensing data, and artificial intelligence. And Blue Forest is one of those examples, I think, of the kind of innovation and green investments we're seeing in the region, the whole kind of new market of carbon credit. And we want to understand how these programs and businesses might be good investments and also good for the environment, for carbon capture, for climate adaptation, especially in coastlines in the region. So with those introductions, let me start the discussion with Jill, if you don't mind. And Jill, I was hoping that you might give us a little bit of a big picture view. Why do we have a need for green investments and climate finance solutions? And how does this fit into these larger challenges that we're seeing in emerging markets right now in terms of access to debt, managing debt? We're seeing really the acceleration of energy prices, global inflationary pressure, just as we're coming out of the pandemic, hitting quite another major global economic crisis. So if you could just sort of situate the environment in this ecosystem of green finance, I think that would be a good starting point.
No, absolutely. No, and thank you so much, Karen, and thank you to MEI and to the World Bank for organizing this panel. It's a pleasure to be here. I think before we actually even get into the kind of green finance issues, I'd like to actually even take a step even back further, kind of even a bigger picture of what's going on, particularly in the last couple of weeks. I think the current events and the war in Ukraine has such a profound impact on so many of aspects of what we think about and the way that we're operating, that it's important to kind of acknowledge all of that dynamic. Because beyond the tragedy on the ground in Ukraine and the loss of life and the millions of people who are displaced from their homes, this is going to most likely have a lasting impact on so many of the global themes that we're dealing with. First is perhaps certainly, I don't know if it's going to be a collapse of global coordination or certainly a massive stress on future global coordination. I mean, we've really been experiencing a very kind of blessed time of a moment where the whole world, I mean, we've had our stresses, obviously, but the whole world has really generally been cooperating and communicating around policy differences and debates on whether it's trade, debt relief frameworks, and climate change. And so I think if we are moving into a world where we're having kind of spheres of influence, that's going to have a profound impact, particularly on emerging markets. As we know from the Cold War, there were plenty of hot wars happening, and the theater of the hot wars were actually in the emerging markets, where countries had to choose sides. And if we are kind of moving into a kind of, again, that sort of multipolar kind of global situation where countries have to kind of choose which major global partner they're going to be aligning with, I think that's going to have a profound impact. Next, we also have an increasing likelihood of debt distress from many sovereigns. As you mentioned, even before these recent events, we saw rising inflationary pressure, advanced economies already recovering from the pandemic, looking forward to raising rates, which was going to have a kind of ripple effect onto emerging markets. I think after these last couple of weeks, we've seen enormous uncertainty in the global markets, which is never good for capital flows. And so emerging market bonds have been collapsing over the last week. And that's either going to result in loss of market access for many countries, or certainly at a minimum, significant increases of cost of capital and kind of refinancing risk for them going forward. We see, energy prices skyrocketing. So for many countries that are oil importers, this means less fiscal space for other programs of their sustainable development goals or green transition. It just really puts the pressure on. Similarly, with agriculture and food supplies for many countries that are dependent on Ukraine for that, it's just an enormous stress. And then lastly, and most importantly, and more relevant to our conversation today, is about energy markets. What does this really mean going forward? Does this, it most likely accelerates the transition, or the need to transition, or the urgency for transition to green and renewable energy. But really, how does that actually play out? And what is that time frame? And how is that, again, going to happen in this world of maybe strained global coordination? Because again, kind of during the pandemic, and this kind of coming to kind of what Potomac Group's wheelhouse is really on sovereign debt and debt sustainability, debt restructuring, and over the last couple of years, linking sovereign debt to climate and nature outcomes and greening that kind of international financial architecture. And what we saw in the kind of leading up to the pandemic was already that international financial architecture was a little rickety, a little rusty. It wasn't working as well as it had before because of the changing nature of the way governments fund themselves and with whom. The pandemic really hit and put an enormous stress on the system. And we saw a pivot to kind of global coordination through the G20. And we saw enormous response to the IMF and World Bank for particularly low-income countries. And we saw the G20 really stepping up with what was called the DSSI, which is the Debt Service Suspension Initiative, which really gave a kind of payment holiday of both principal and interest to many countries for liquidity issues. So just you couldn't pay your bills, so you got a little holiday. And then they realized that wasn't going far enough, so the G20 went one step further with introduction of what they call the Common Framework, which was for countries that were experiencing more solvency issues, kind of really facing kind of bankruptcy, if you like, which obviously countries can't go bankrupt, but in that sense of profound solvency issues, a kind of a framework for global coordination. And again, that was happening at a G20 level. So we already had, as members, as creditor countries, the United States, China, very importantly, was at the table, Saudi Arabia, India. So it was a nice forum for kind of looking for new ways of handling debt distress. They had not yet gone quite so far as to really introduce kind of green elements into that framework of debt swaps and the like. However, there is an enormous interest in those kind of transactions, certainly following COP26 last year, as well as a very significant transaction in Belize that was sponsored by the Nature Conservancy, and where Potomac Group was also involved. So a lot of attention has been on these new mechanisms and new financial innovations of how do we link sovereign debt to meeting these other global goals of transitioning and meeting the challenges of climate change. What happens in this new kind of paradigm that's emerging now, and how we're going to kind of handle that global coordination has yet to kind of really be seen. But I don't know if I should keep going or if I'll just kind of pause
that's
there.
great. I mean, I wonder if, just so we're clear, if no one understands or hasn't heard of a debt for nature swap before, maybe you could just spell that out a little bit. What does that look like? And the project that you did in Belize, do you know of others that perhaps might be applicable or active in the Middle East, North Africa?
Sure. So debt swaps were introduced in kind of the mid-late 80s, and they were very popular for some time. Mainly on kind of a bilateral level between one government who had lent money to another government, and they would sit down and say, instead of paying me back, in cash, you'll pay me back in this other commitment for climate or nature. At those times, it was mostly in the old days around kind of conservation, and there was a real boom of these sorts of transactions in the 90s. Then it went out of favor. It didn't go out of favor because there was anything wrong with the types of transactions, in my opinion. It went out of favor because something better came along. And that something better was the HIPC initiative. It was the Highly Indebted Poor Country Initiative from the IMF and World Bank, which basically said, instead of paying you back in money or paying me back in conservation, you just don't have to pay me back at all. We just wrote off the debt. So in the 2000s, we just saw this kind of collapse of debt for nature swaps. But like I said, it was because something else came along that just eliminated the debt. Then in the kind of 2010s, et cetera, we saw this kind of rapid rebuilding of sovereign debt and governments borrowing again. But when they went to go and borrow again, they borrowed more from the international capital markets, as well as from what we call non-traditional bilateral lenders. It wasn't the same sort of bilateral lenders as in the past, and China being a very important lender to many emerging markets. So then we've seen this kind of debt swap kind of start to come back, and it's really coming back now kind of in its new kind of 21st century form, which is going to be addressing mainly private sector bonds through market operations, as well as perhaps more sophisticated kind of bilateral conversations that are going to go on. The Belize transaction and many others in the past have been supported by what we call kind of a third-party sponsor. The largest kind of proponent of this has been the Nature Conservancy, which is kind of the world's largest conservation NGO out there. And what they do is they actually raise money themselves in a special purpose vehicle with the country, with the debtor country. And then they basically take out the existing creditors. In the case of Belize, there was already a creditor committee. The country was already in default. So there was a cash tender offer for that existing debt. So basically the existing bondholders will just walk away. They'll get paid at a discount, but they just leave the picture. And then you're left with, the NGO, the sponsor of the swap, with the country. And then those terms of the new debt can be in both local currency, it can be longer tenors, it has a lot of benefits. And then there is a portion of that savings that is then dedicated towards conservation. And in the case of Belize and in many other swaps, there's usually a trust fund that is created that kind of is funded into perpetuity for conservation efforts in the country. So there's a very kind of intense kind of implementation side of it that is usually done in partnership with, again, a kind of an implementing partner or sponsor on the ground.
Thanks, Jill. I mean, I think that's fascinating to think about this sort of evolution of financial products, which are sustainable finance, which is now all the rage. But I love that you mentioned it's not a new idea, right? It's been around, particularly in debt products, which is fascinating. And so I thank you very much also for this sort of framing of where we are in this moment in terms of access to capital, which is surely going to affect the region, the Middle East and North Africa, particularly in terms of fiscal space and the pressures that oil and gas importers will be under. So I think that's absolutely the important place to start this conversation. I want to move next to Lama, and maybe Lama could give us again a little bit of a breadth of understanding of, what is the sort of the rise of sustainable finance. Help us understand how, the public sector might facilitate green investments, and how do you signal impact to kind of a larger and private investment community, and maybe talk about some of the sustainable finance solutions that you're seeing in your work in the Middle East and North Africa.
Sure. Thank you, Karen, and thank you to the World Bank and the MEI, as well as Jill and Assad. It's a pleasure to be here. So I think probably just sort of building off of what Jill said, the fact that this is going to be, related to sort of the energy transition and the critical challenges that this poses for MENA, it's imperative for the region to sort of promote sustainable practices that are crucial to essentially achieving their sort of dual goals, right? And that is meeting climate goals or otherwise, sort of emissions reductions, but also diversifying their economy. And that will necessitate both a dynamic private sector, but also a dynamic financial ecosystem. So in that vein, let me just highlight 3 points. So the first one is to your question, sort of what's fueled the rise for sustainable finance? In short, it's this growth that we're witnessing in the region, this sort of renewed fervor towards climate investments, and also their need to diversify. So just as a very basic primer, sustainable finance, as we know, is the process of driving capital towards investments that encompass ESG factors, so environmental, social, governance. And that's done to sort of mitigate those challenges such as climate, biodiversity, labor standards, et cetera. And sustainable finance can take on multiple forms. So we've seen examples in the region such as sustainably linked bonds that have key performance indicators or otherwise criteria that need to be met. But we've also seen bonds that delineate the use of proceeds, i.e., where is this borrowing going? Is it aligned to the sustainable development goals? And in this vein, I suppose sustainable finance can also mean ways that local institutions are trying to innovate products that still meet sort of global standards and market practices. So just in a region where, hydrocarbons, again, continue to form the backbone, I think what's happening is that they've been forced to rethink how to rebalance this transition risk, if you will, to ensure long-term economic viability moving forward. So that's the first point. The second, and to your question, sort of on the role of the public sector and the government and the significance of regulatory reform. So I think this is increasingly important, particularly in the region, just sort of given how many projects, initiatives, et cetera, are very sort of sovereign or state-led. So this will speak to sort of the transition roadmaps, the green agendas that have been set forth, which sort of act as enablers, and they are incenting the private sector, right? So whether it's private sector participants on the corporate side, but also financial institutions. And it doesn't just stop sort of at the agenda or ministerial level, but we've also seen examples of sovereigns and quasi-sovereigns go ahead and partake in the capital markets like we saw in 2020, whether it was Egypt, the Saudi Electricity Company, et cetera. So all these are really important because they're signaling impact to the broader market. And we've also seen, most recently banks such as the largest commercial bank in Saudi Arabia in December actually established a sustainable finance framework. That's the Saudi National Bank, which is formerly NCB. So as I sort of mentioned at the outset, which was essentially that in order to meet sort of the dual goals, they need to diversify the economy, which means they need to essentially strengthen the private sector in these countries. And so that's going to necessitate obtaining diverse sources of funding and tapping domestic, regional, but also international finance markets. And Jill mentioned that, a lot of countries will be going into even higher debt distress. There's already sort of limited fiscal space. And so inadequate access to finance remains to be sort of a burgeoning constraint, if you will. And of course, MENA isn't all homogenous. We know banking systems in the Gulf remain well capitalized, but other countries in the region, say Algeria, Iraq, even the more fragile economies, right, that remains weak. So maybe if I can just characterize the financial sort of ecosystem, and then we can perhaps talk about challenges moving forward. But essentially, because we know that the financial institutions in the region are characterized by concentrated lending to government projects, they're also really largely exposed to national oil companies. And so this is going to present several challenges because these financial institutions will not sort of have the bandwidth or the capacity, if you will, to on-lend. So we might see the crowding out of small and medium-sized enterprises, which we know are sort of the pulse behind developing a lot of these economies. But we're also going to see the impending impact on bank portfolios from really two main things: the concept of stranded assets, but also the effects of climate change. And so this will create a liquidity squeeze and it'll limit private credit provision. So just maybe to give a background on what stranded assets are as well, they're essentially just fossil fuels that won't be recovered due to, again, this renewed interest in climate, but also because we're seeing a lot of investor pressure and stakeholder really direction to veer away from conventional hydrocarbons, if you will. But it's not just the hydrocarbons that get stranded, but really everything in that value chain can end up being stranded. And so this will form a systemic risk to financial stability in the region moving forward. And it will necessitate, I think, regulatory sort of intervention in how perhaps these financial operators or banks that are operating within these financial ecosystems can better account for these risks moving forward.
Thank you, Lama. That's fascinating. And we're getting this very, I think, structural understanding of what's happening in financial markets as relates to climate change and sort of demand for new kinds of investments and the worry of having challenges, both to kind of, if it's a problem of fiscal space for the weaker economies or for those that are blessed with hydrocarbons, if you don't get it out of the ground now when prices are through the roof, you might not get another chance 5 years down the line. I want to bring it down to sort of an on the ground level, literally, and talk to Asad Khan about the work that he's doing, because I think this is more of a positive story. It's really fascinating. How do you create a business case for offsets, right? Offsetting that risk of being in the hydrocarbon business. I know oil companies are interested in the kind of work that you do, but also in changing the trajectory of climate adaptation in the region. So I hope, Asad, if you might tell us a little bit about Blue Forest and sort of the business model that you're in. And how does it work? How do you do carbon capture through nature, through reforestation? And where are the places, particularly in the Middle East, North Africa, or other places that you're working, where you're finding a lot of investor interest in this kind of tool?
Okay, so I'll start off with what Blue Forest is. So Blue Forest is a project developer, and what we focus on is developing projects and campaigns that are focused around mangrove reforestation, and we structure them as carbon credit projects. Now, two main questions we get about Blue Forest is why mangroves and why carbon credits? So mangroves are actually a magical tree. They grow in salt water, near salt water, along coastal areas, and you can find them in subtropical and tropical regions. So you find them, they're quite widespread. And they also provide essential ecosystem services to the communities around them. So one of the ecosystem services they provide is provisioning. So they're a really good source for fuel, for timber, and for charcoal. They also regulate the tides, and they also shield coastal communities and areas from flooding and erosion. Another important thing they do is they help against saltwater intrusion, which is they prevent saltwater from going too far inland and mixing with the groundwater. They also provide a habitat for, it's like a spawning ground for fish, and quite a few commercial fish species actually start in mangroves. So if you lose your mangroves, you're actually losing a lot of commercial fish. They're also a spawning ground and a breeding ground for a species of birds, crabs, and a number of different animals. Like in Bangladesh, they're quite a huge habitat for tigers in the Sundarbans. So what makes mangroves really special is they absorb 5 to 10 times, or I should say sequester 5 to 10 times more carbon than regular terrestrial species. So that's why we thought it would be the perfect type of forest to reforest. I mean, it does come with quite a few challenges. Working in coastal areas, it's extremely muddy. The weather is really unpredictable. So it's not as easy or as straightforward as setting up reforestation projects on land. And coming to your question about carbon credits and how it's a business model, with a lot of countries and companies aiming to be carbon neutral or aiming for net zero by dates such as 2050 and 2030, the carbon market has actually grown exponentially. I read somewhere that it grew last year by 180%. So how you trade carbon is you sell 1 unit as 1 cubic ton of carbon, which I think recently the price was up to $80. So if you reforest or protect a large enough area of mangroves, you can be sequestering 500,000 tons of carbon per year, which is quite a good number. Another reason why we think carbon credits, or why we took the carbon credit approach, is a lot of reforestation and conservation projects lack funding. People aren't too keen on funding them because there's not a lot of return on investment. But in getting carbon credits involved in this changes everything. We've been approached by quite a few very large energy companies that are interested in investing and helping us develop projects, so we can set up some sort of carbon trade with them in the future when we start claiming our credits.
That's fascinating. And I mean, if you would tell us a little bit about your work specifically, you're in the kind of censoring and monitoring and using AI. I mean, the application of technology into a business case, which is about climate adaptation, is really fascinating. And I wonder if you could, I mean, tell us the story. Like, how did you get into that business, and what do you see as kind of growth areas, particularly out of Dubai? Where do you see this going?
So initially, I've always worked with wildlife conservation. I worked as a field guide in South Africa for a bit, and I transitioned into anti-poaching. And I felt like it felt like a cat and mouse game because we were always just chasing the poachers and it wasn't very effective. So I figured drones would be a great way of tracking poachers or detecting them before they actually do any poaching. And then one thing led to another, and then I developed drones in Africa with thermal sensor and AI. So we kind of had an automated flight system that would flag thermal signatures that weren't supposed to be there. And based off that, I transitioned into habitat restoration. I did some work with wetland restoration in Scotland. And then because I'm based in Dubai, I saw what Vahid was doing and it felt like a really good match. So where drones come in is how we started off is we find hotspots globally where there's been a lot of mangrove degradation. So we use satellite data to kind of pinpoint where we want to go. And then once we get there, because satellite data has a lot of limitations in terms of the refresh rate, for example. So a satellite only orbits a certain area, say once every 4 or 5 days. So there's a lot of gaps in the data. And it's also affected by weather and clouds. So what happens sometimes is when a satellite actually passes over the area you're looking at, it might be covered by clouds or it might be too foggy to see what's happening on the ground. So then you have even larger gaps in your data. Second limitation that satellites have is the resolution. I think the resolution we get with satellites now is about 30 meters square. And with a drone, you could get it up to 10 centimeters. So that's a huge discrepancy in the quality and the resolution of data you're getting. What we primarily do is we fly drones with LiDAR sensors. So LiDAR is like a laser sensor. It's a time of flight sensor. So it measures the time between when the laser is emitted from the drone, when it hits the ground and when it reflects back. So this helps us get a really good idea of the tree cover in the areas, and it helps us calculate the above ground biomass. Now to calculate how much carbon an area sequests, you need to calculate the above ground biomass and the below ground biomass, which is the soil, so everything below the tree, as well as the tree itself. We're currently doing work in Mozambique. We've actually signed Africa's largest mangrove reforestation program. It's around 185,000 hectares of land. We're also doing some work in Tanzania, in Kenya, and locally in the UAE, we're a partner with the Ministry of Climate Change, where we're doing their Tree for 50. So it was UAE's 50th day, and we're planning to plant 50,000 trees, mangroves. So we've completed phase 1 in Kenya, and tomorrow we're actually going to be at the Kenya Pavilion at the Expo talking about what we've done.
That's so interesting, Asad. Thank you. And I love that it really brings home the application of technology, creating a market for these kinds of carbon credits, but also what Lama was describing as signaling, to an investor community that this is something that can work, right? And you're coming at it from a private sector perspective, but I think you've got a lot of interest from governments and state-related entities as well. So I think that's a really interesting model. I want to circle back again, maybe to Lama and Jill, and then we can open the floor to questions. So those of you listening, if you'd like to type in a question to the Q&A, we'd love to hear from you. Lama, I mean, you started to talk a little bit about sort of the risk of stranded assets. I wonder if you could kind of think about how different kinds of investor communities are looking at, where they want to go next and what they might want to offload. We've certainly seen from international oil companies a lot of divestment in the region, selling off or making subsidiary firms into some of their hydrocarbon businesses. And, I wonder what you predict now. Oil prices are incredibly high. Are we going to see a reversal of this trend, or is the sustainable finance model still going to have legs? Or, what's your estimation of the timing?
Yeah, so I mean, it's a tricky question. But I don't think that we're necessarily going to see a reversal. If anything, I think it's sort of going to move in parallel. Essentially, the oil, or if you will, sort of this hydrocarbon revenues now account for so much more. So arguably, they could actually be divested towards maintaining whatever existing capacity oil companies have, but then they can also funnel a larger chunk, if you will, of those revenues towards really developing and strengthening renewables moving forward. I don't think we're going to see hydrocarbons necessarily dissipate anytime soon. If for nothing, just the fact that for developmental reasons, for example, just hydrocarbons like gas are still sort of necessary. But I do think that just given, again, sort of this investor interest and this push towards more transparency, more accountability, being aligned with sort of climate goals, but also these principles, whether they're green or blue, really trying to improve assets moving forward. I think we'll continue to see a push for sustainability. So it's not really going anywhere anytime soon.
Yeah, I agree with that. Jill, I wonder if you have any kind of thoughts on that, or we do have a question in the Q&A about mobilizing private capital to invest in adaptation. There are lots of, institutional investors, pension funds, I don't know what you're seeing even from kind of sovereign investments that might be interested or willing. What's your outlook there?
No, absolutely. And I also want to kind of wrap it into some of Assad's comments as well about the data, because I think what we're seeing now is a real opportunity that we haven't had in the past. And data and technology is part of it. Is because, as he was just describing, and it's so exciting to hear what Blue Force is doing, about the drones. And as you're saying, kind of the satellites were great. Even that was already groundbreaking. But, if we can get even more granular and in our data and this monitoring, the reporting, the verification, all of those sorts of things can really provide both the issuer of new sustainable finance, whether that's a corporate or a sovereign, as well as the investor in those instruments, real kind of clarity on the actual impact on the ground. And so that enables us to really structure financial instruments that have what Lama was talking about, these key performance indicators, these KPIs. So we can literally say, like, okay, we're going to create a bond, that is going to be linked, not like a green or blue bond that's going to say, okay, I'm going to lend you $100 million and you're going to promise that you're going to plant, mangroves. But you're not going to default if you don't plant the mangroves, right? That's kind of like our use of proceeds bonds right now. But where we're headed is a new kind of instrument, and the corporate sector is already doing this. Sovereigns are still kind of working out the kinks of what this is really going to mean. But we can say, we're going to just borrow that same $100 million for just general use of proceeds, but we're going to link the payment to that to, let's say, restoring our mangroves. And with this drone technology and the sort of thing that Assad was talking about, we can literally kind of now say, okay, did they do it or did they not do it? And actually kind of whether we are paying for that performance or we're punishing them if they don't meet the KPI, however you want to structure the bond, there's all sorts of different ways that we can do it. But it really just unlocks this potential of the financial markets of really tying finance directly to outcomes. And that's technology, and it's really exciting. And I don't think there's any putting that back in the box and forgetting that we know how to do that. And I think retail investors are, kind of clamoring for this. Institutional investors, asset owners are now kind of saying, okay, well, we really want to have this impact. ESG matters. I think as we were saying earlier, the events of the last few weeks is actually just underscoring that even more, that investors are wanting to, kind of have a say. I think it's really exciting, and I think for the region, it's also an opportunity, as Lama was saying, to diversify, to kind of promote, all sorts of different sorts of investments, technologies, and these outcomes that are important. And you can also kind of, what we're seeing is a lot of pilot programs and a lot of what we're calling sandboxing of ideas. And so you can really kind of just try things out. And so there's a lot of innovation going on. So I think it's exciting to try to kind of have a little bit more upbeat, so I'm not just the kind of doom and gloom. I think there is some real progress to be made.
Yeah, I do want to focus on the positive, right? And I do think that's really exciting. And one thing Lama and I have talked about before in some previous conversations, we did a podcast together, thinking about the sort of verification, right? And this is definitely true when we think about ESG investments. Who says they're ESG? How do we know? And
Exactly.
What's the third-party verification kind of process? And but you're exactly right that we do have more and more technologies and applications of AI to kind of get a bigger picture of where the money goes. So Lama, maybe you want to comment on that, or you might want to also, it looks like you might have a question about, how do you finance these kinds of initiatives, and what's kind of the role of public and private sector coming together, which is really interesting as well. But Lama, did you want to ask Assad a question, or?
Yeah, I think I was just, yeah, sure. So I mean, just going off of your initial question, which is how do we get private capital to be mobilized, right? There's two ways. One is you just sort of the government leads, right? You have, for example, in the UAE, they've started this Ittihad 7 initiative, which was essentially trying to promote renewable energy in Africa, but also trying to, increase electricity access. So that's one part. And I think the other part is really maybe taking the blended finance approach, which is really just pulling together concessional or, just really low rate finance or donor funding, philanthropic really, if you will, to sort of propel and incent the private sector to come in, such that, the risk reward sharing mechanism is may make a bit more sense for the private sector. But yeah, I was just curious, Assad, how do you see sort of initiatives like Blue Forest, financing or raising finance or moving forward?
So we've actually had quite a lot of interest from again, energy companies, and it depends on how they want to partner with us. It's either they finance, they help us set up the project and finance everything we need to kind of get the project going, and then at a further date, when we start actually getting carbon credits, we strike a deal with them. Or we have people that are investing, that want to invest in our company, again, just so they can get carbon credits. So it depends. Where we've been approached by a number of different types of investors.
That's interesting. And, I wonder how this links back to this kind of bigger picture in terms of infrastructure investment in renewables and in the region, and how you bring, different interested parties to the table. What do we see trends perhaps in concessional finance through MIGA or the IFC? Like what are trend lines for the Middle East, North Africa, or other regions perhaps that you're seeing in terms of, building new renewable power plants? What's working?
Yeah, so I think climate's sort of moved to the fore of the sort of IFC World Bank agenda writ large, and I think renewable energy is certainly getting a push. I think from where I sit within the IFC, we've been seeing a lot of interest in sort of green bonds and blue bonds, and really sort of honing in on what qualifies for which asset. And And I do think ultimately, just given sort of even in the earlier sessions today, they were talking about water stress in the region. So there could be a part where there could be, sort of a carving out of blue bonds, if you will, or sort of blue bond assets, where the financial institutions can come in and sort of pay attention to that in certain countries. I think MIGA, maybe Jill can take this one because it's probably closest to what I've seen in the debt for nature swap setups, where they offer sort of guarantees, sort of political risk guarantees. I think the US has been doing that in the debt for nature swaps. And so if there is room for that in the region, I think it's yet to be seen.
No, exactly. I mean, just on that point, in the Belize transaction, which was kind of the largest private sector or largest debt for nature swap involving kind of private sector debt ever to be done. And what really enabled that entire transaction was actually the US Development Finance Corporation. So it was a political risk insurance that was provided to, it's a complicated, and I don't want to go down the rabbit hole of Belize, and there's a lot of information out there, and happy to answer it at another time, but there was multiple transactions in this one debt for nature swap, but you basically had Belize promising to pay the flows that were ultimately going to be paying, that was called the blue loan, that was going to be kind of basically the asset of this SPV that would then pay a blue loan to new investors, which were more kind of ESG investors. And that blue loan from Belize, which really would have had the Belize risk, which let's not forget was in default, was enabled because the DFC came in and gave that political risk insurance. And so suddenly, you went from Belize risk to what they say kind of US risk with a little Belize mixed in. I mean, the credit rating of that instrument jumped 12 notches. I mean, it was a significant enabling of the entire transaction to happen. And it's that sort of thing that I think we're all looking at, of how can we replicate that? How can other institutions play that sort of role? And how can we really get creative to mobilize, or to kind of best use public sector dollars or funds to bring in those private sector money? How do we really mobilize that in that kind of blended finance? And I think in the region there's enormous opportunity with various governments who have acted as creditors before or have large sovereign wealth funds, etc. There's just a lot of room for creativity to again, like I say, kind of mobilize the private sector into particular transactions with desired outcomes.
Yeah, I think that's, I mean, when we describe the world of green investments, right, it's huge. But in the Middle East, North Africa, we're definitely going to see sovereigns taking, the lead, probably.
Yeah, no,
but
absolutely.
One of the, go ahead.
No, I was just going to say absolutely. And like, as both kind of investors in it, as well as kind of the enablers of these transactions, potentially as kind of sponsors in one way or another, are providing this various, either kind of lower cost, kind of like Lama was saying, kind of in the blended finance, or by providing any sort of credit enhancements that really kind of unlocks the power of the private sector and makes those donor dollars just stretch that much further.
Looks like we've got a question from the audience. So to add to Lama's good point about the continuation of global investments in renewables, hydrocarbon sector's importance in the world economy will likely keep investments buoyant for the foreseeable future. This is from Albara Al-Wazir. And he says, if anything, the current spike in oil prices should accelerate investments in renewables, especially by oil-consuming dependent countries, to hedge their exposure to volatile prices. And it says, it looks like the world has moved beyond the idea investments in renewables is dependent on factors like oil price movement. So yeah, I mean, I think this is definitely, again, kind of, movement on the part of sovereigns, particularly from the wealthy oil producers in the region. They're going to hedge a bit. And as Lama said, part of the argument for the continuation of hydrocarbon exports was that you need the revenue in order to make your own transition, right? To invest in renewables, to invest in what will come next. I'm more interested, and I wonder if any of you want to reflect on what this means for weaker economies or economies that are in sort of that blue area, particularly those that are interested in getting into the gas business. What we see in Algeria or in Egypt right now, or in the Eastern Med, there will be maybe a different kind of window available. And how do you structure kind of financing of a hydrocarbon industry, a gas industry, with links to climate adaptation with it? I mean, is that part of our future? Anybody seeing products like that or experiences like that?
I mean, one thing that I have kind of started to notice which is a little bit worrisome, not to get kind of doom and gloom again, but that you see, I think from one perspective, kind of gas is a nice kind of next step in kind of working towards our goals. But in many quarters, that's already kind of, off the table, so to speak. Like, we have to go straight to the renewables. And it's not clear yet. I think kind of policymakers in general are just trying to still kind of figure that out, of how to walk that line of what is acceptable and kind of leading towards an ultimate goal, or what is just completely like, no, we're moving away from that. I mean, coal's an easy one, but then it very quickly, I think, gets into kind of tricky territory for donors, and they're ultimately their shareholders or stakeholders that they're answering to. So it can. That's actually a very kind of, I think, unresolved issue, at least from my perspective. I don't know if Lama or Assad have seen other things.
Yeah, I think my addition to this would be, we sort of have to deal with the reality on the ground, right? And that is, these countries are still really largely focused on their hydrocarbon sort of revenues. And so one way would be to say, okay, let's maybe create a ring-fenced vehicle, sort of akin to what Jill had mentioned, a special purpose vehicle, and then have a portion of these revenues that are coming in be directed towards diversifying the economy. So be directed towards productive value add investments that are going to create, actual value add jobs, and also maybe be directed towards climate adaptation or resilience. Maybe that's where Blue Forest then comes in and is able to sort of benefit. So in a way, there's a sort of secondary effect, if you will, to taking this money that initially would, otherwise have just gone straight to the budget to be spent on, say, health, social, et cetera, but then to maybe have a carve out that way that, could increase accountability, transparency, sort of some sort of metrics that could be, yeah.
And you mentioned a really important component of thinking of green investments, which is job creation, right? And so the whole logic that as you transform an economy, that you also are creating new kinds of opportunities. And I think, this is where also the technology adaptation becomes really important, because we are creating new kinds of industries and new job opportunities.
And just generally, I think these projects have a big social kind of component to them, of local communities, of smaller, Assad was mentioning and about kind of like the sustainable fishing. And so you get into the kind of the local industries in many of these, and in many cases, indigenous communities as well. And so, yeah, I think it's important to kind of underscore that when we're talking about green investments, or we're talking about climate and nature, it's actually often, very, no pun intended, kind of grassroots as well, of just kind of the locals.
Yeah, yeah, great point. Well, I mean, I think we'll have kind of closing comments. I don't know, Assad, do you want to add anything else? We'll wrap up, and then I think Mohammed's going to close out our day. Oh wait, I see another question coming in. Well, yeah, the question is about norms and taxonomy and sort of the regulatory environment. And I think this is absolutely true when we think about ESG as a whole, like who decides what it is, and then more so in sort of creating a regulated carbon market, which we're not really quite sure how that's going to go globally as well. So yeah, I don't know if anyone wants to comment on either
just
the regulatory
yeah,
aspects.
just that it's all really evolving. I think there's just such rapid change in these markets. And I know the ICMA has already put out kind of principles for green and sustainable, sustainability linked for corporates. You know, those are in the process of being revised. I think almost every global institution right now is kind of re-examining kind of their frameworks and kind of integrating in ESG and whether regulations or just taxonomy, and just kind of figuring this out. But it is definitely a rapidly moving space.
Anyone else? Any final thoughts? Assad, Lama?
It's just an exciting time, I think, to be in the region and to sort of, be paying attention to what's going on there. There's just, enormous sort of growth, and there's a lot of weight being pushed behind these projects and approaches. So I guess we'll see where we land in 5 to 10 years.
Assad, any closing comments?
Yeah, just circling back to what Jill was saying about the whole community aspect of it. Let's take our project in Mozambique, for example. That's a 30-year project, and a lion's share of what we generate from the carbon credit stays within the community, because there's been a lot of reforestation projects that have been done before, where people just go and plant 10,000, 50,000, a million trees, and then there's no one actually there on the ground looking after it. So how we do things is we plan to create something that lasts, create jobs, and create a whole economy just around carbon credits and the mangroves, for example.
It's a great point. Well, I think that's a great place to close. And thank you, the three of you, for really different perspectives and expertise. And I think it provided a rich discussion for us. So thank you for everyone who tuned in. And we'll continue this conference in partnership with the World Bank tomorrow on climate action. I'll get the floor to Mohammed to say goodbye and thanks from him.
Great. Thank you, Karen, and thank you for the panel. Really, really, really great discourse discussion. I really appreciated some of the comments raised and where we can move forward from here. So this essentially concludes our first day of our 2-day event. We'll be starting tomorrow 9 a.m. Eastern time, where we'll be going over our next 2 panels, which will be starting off with achieving economic growth through energy and transport decarbonization. And then our final panel, which actually I will be moderating, is on enhancing climate resilience in urban environments. And then we'll conclude the day with a few final remarks, and then talk about next steps jointly from the perspective of the World Bank and the Middle East Institute. So thank you all very much, and I hope to see you tomorrow.